Fed has painted themselves into a corner, and all they have left to do now is to influence markets using their narrative. All the while, the political divide between left and right is widening, as is the wealth gap. And according to my guest on GoldCore TV this week, Peter Grandich, he believes that the reputation financially, politically, and militarily of the US has been damaged, and he fears where this might lead. All this and more in this episode of GoldCore TV. And remember, if you want to see more interviews with industry experts and thought leaders in financial markets, subscribe to GoldCore TV and hit the notification bell now. And if you want to learn more about how to buy, sell, and store physical gold and silver, log on to goldcore.com. Your precious metals experts. Peter Grandich, welcome to GoldCore TV.
David, much of a pleasure to be here.
Now, stock markets, they're basically at their all-time highs at the moment. Oil is at or near where it was about 2 years ago. The Fed have talked about tapering. They haven't really given us a huge amount of guidance of, when and by how much. And the canary in the coal mine that is gold is kind of suggesting by its price action that there's not too much to worry about at the moment. And a lot of commentators would have you believe that the good times are going to continue, particularly with stocks. You're not one of those commentators. So what is it that they're missing?
I don't think it's so much, David, that they're missing anything. I think it's that, as always, when people will look back, let's start with, first, we're in the biggest and ever in America's history financial bubble. I think it's unprecedented. I've never seen, I'm at this almost 40 years, the complacency among both professionals as well as individuals, keeping in mind that over half of people licensed in the US that are giving out investment advice these days have only been doing it since the last financial crisis. So part of that complacency is really lack of experience. I get made fun of still, even though I'm in the advanced stage of the twilight of my career, because I'm an advocate for gold. I hear the Bitcoin maniacs, who I call them, this old man, you don't know it, you're past your prime. I mean, all this other stuff that I get and all. And yet the people that are stating that really have never experienced even getting to a roundabout, or as we like to call them here, traffic circles. And one of these days they're going to arrive there, Dave, and they're going to see that it's not as easy as driving on a one-way street. So I look at gold this way. If you can imagine, if I told you all the things you just mentioned, stock market's at all times high, everybody thinks it's great, Fed seems to have everything in control and all, gold should be a lot lower. I don't think the concentration should be about why isn't it higher. I think you should be asking yourself, why has it been able to maintain what it's done? I think it's for two reasons. One, which a lot of people don't talk about because years ago was a big negative, and that's continuous central bank buy-in. Why are central banks still purchasing net gold? And two, real interest rates. At the end of the day, that's all that's going to matter. Well, now, even though we got a Fed that says it's transitory, we have rates at 1% and 2%, and we have inflation double, triple, or more than that. Central banks buying, real interest rates, perhaps at their highest level ever. I don't think you need much more to be a gold buyer. So it's not how much, Dave, you make that's going to separate you from the winners and losers, but how much you don't lose. And one thing I know I count on personally is that gold doesn't afford me a lot of downside risk. So if I can go into something to me that doesn't have a lot of downside risk, is really not liked by most people, and still in my book has a lot of upside potential, I can't find anything else right now. In fact, the last investment that had that opportunity was uranium, which I was a uranium bug, and now that's moved. So I think it's only a question of when, not if, that gold has its day.
Let's unpack that for a second then. What's the answer to why are central banks continuing to buy gold?
Well, Dave, if you knew that answer, I think we could really make a lot of money, because it's very strange at a time when we all know that, I think those that have been around the block know that, at least here for the United States, the Fed is trapped. The Fed has put itself in a corner. It has created, some people call it monetary heroin, some call it crack cocaine monetary, whatever it may be, it's really hooked the investment community on that it has to have its foot on the pedal, and the slightest easing or taking off is only going to cause a huge problem. Well, that was good when we were the world's largest creditor nation when I started in the business over 40 years ago. But now we have 30 trillion. And I still find that, Dave, hard to say with a T,
Yeah.
$30 trillion in hard debt. Well, Dave, in 2019, the government had its best year ever before the pandemic. It took in a little bit over $3 trillion in revenue. At 30 trillion, if interest rates just go back to say 5%, which everybody seems to think will be okay if it does, that's $1.5 trillion in interest expense. Well, we only took in 3 trillion in our best year. So there are a whole host of reasons. And I think central banks recognize that inevitably one day the paper currencies are going to have a huge problem. And eventually some sort of backing. I don't think it's going to be led by the United States, by the way. I think it's going to come out of China, and Russia will follow second. That we're not that far away from some sort of different type of currency with gold, some part of its backing. I think that's the reasons why they're accumulating it.
And just go back there a second. So is it a case now then that obviously the Fed have painted themselves into a corner? So what they do and what they say, there's a big divergence in those things. And they're attempting to control the market at the moment by their narrative rather than by their actions?
Absolutely. And if you look at, listen, this all started with Greenspan. And I don't think there's been anybody that's worked in the monetary world now that has been more outspoken against what the Fed is currently doing the last few years than Greenspan, when he's really the birther of creating this, insane quantitative easing money creation. Then look at Bernanke. He's not exactly been saying much positive stuff in his private life. Now, of course, Yellen's gone back into the government, so she's not about to turn on that. And if you look at just even the recent Fed governors that left in the last few years, they're all kind of saying this is going down the wrong road. So you're right. But what does that Fed have to say? I mean, imagine if they did come out and speak the honesty which you and I and some others realize, which is more the likely case than they paint. What would happen to markets? They would be a self-fulfilling prophecy. They would crash. So they're caught, and their hope is if it can maintain it and maybe either to the time they get to go out and start making $2 to $5 million a speech, or some miracle comes along. But there's no question right now that gold has been purchased by central banks for a key reason. There's just no other reason to have been doing it. And I think that's because they recognize that the days of fiat currencies are coming to an end, certainly as the US dollar being the reserve currency. I can't imagine, if the good Lord keeps me another 10 or 20 years around here, that the dollar is still the reserve currency from now, especially because of what's happening in the United States right now, politically, socially, and economically.
What, in terms of time frame on this, there's the old Keynesian quote that says, that markets can stay irrational for longer than you can stay solvent. Are we still going to be sitting here in a year's time or 2 years' time having the same conversation, saying money printing's out of control, the Fed are painted into a corner, and we get a lot of people saying, yeah, we were saying the same thing last year. It looks like they're still going to be able to continue to do this for a while. Or what's the tipping point?
Well, Dave, I think the tipping point is there's really nothing left of what I spent a great deal of my time in, what we would call the hard asset or that type of thinking mentality. Most of what was of the hard asset community moved on to marijuana stocks and then cryptocurrencies. And there's really no one that believes the argument that you and I have just discussed here. Yet they won't go out and try to explain then why are governments buying gold of all things? They should be loading up on paper assets. So I just think the very fact that if there is any contrarianism left, which really there isn't, everybody seems, I use in my work, Dave, I show two boats. I show a boat that's just so overfull, it's packed to the rim, and I call that the stock, bond, and Bitcoin boat. And then I show a boat with almost nobody on it, with an old song from the 50s and 60s called Mr. Lonely. And I say that's where I am, being a bullet on gold. But what I do know is this: after almost 40 years, everything is cycles, everything is pendulums. If you wait long enough, old clothes come back, old songs come back, old styles come back. So if nothing else, just the swing of cycles and all, especially when it's hard, you find a needle in a haystack before you find anybody from Main Street, Wall Street talking about gold in a bullish manner. They treat it like kryptonite. So I just think it has all the makings. And again, I got to go back to saying this, Dave, and I think this is critical. And this wasn't my originality. This was taught by my financial mentor. It's not how much you make, it's how much you don't lose, which is going to separate you from the winners and losers. And one thing I would risk everything I have is, if markets do implode, gold isn't going to implode down the same level that stocks and bonds are going to. So I just think, if you want to treat it just as the lesser of two evils, which I don't, I think that's a better choice right now than first stepping up into stocks and bonds.
And talk to me then for a moment. You mentioned the idea that you think that we'll see an emergence of a currency that possibly will challenge the US dollar. Talk to me a little bit more about that. Where do you think that might originate out of?
China. I not only do I think they're our economic equal right now, and I think actually what they're doing right now is painful for them now, but they're cleaning out, or hoping they can clean out, their financial system pre this entry into it. And I think they've gotten.
Can you give me a few examples of that?
Well, I just think that, we see now in the current, as we speak, there's some concerns about a washout of some of the debt in China. They're taking a step back. They greatly eased off their monetary push. They sold some of their strategic reserves, as we spoke, first copper, then oil. I think they've been emboldened also politically by what's happened in the U.S. in terms of being a world power. There's no question now that what occurred in Afghanistan has clearly made not only our enemies emboldened, but our allies asking, hey, what the heck is going on with this United States? So I think any plans that they had, which I think they did, have probably been accelerated now. So I think it may come out sooner than it would have, say, 6 or 12 months ago. So it would not surprise me. And like I said, it may be a year or two away, but I think it's a matter of months. I really think China is ready to take the big step and take over as the economic powerhouse, so to speak. And they're going to show that by showing that militarily they can now compete and possibly even beat the United States. And so with that, that's why I think also they and Russia have been very large buyers of gold. And I think they're prepared to offer an alternative to the US dollar when all this comes out.
So I put you on the spot here for a second. I say, put yourselves in the shoes of Fed Chairman Powell. What can you do for the next couple of years? Is there anything that he can do to right the ship? What needs to be done?
Well, he had his chance a couple of years ago. If you remember, before the pandemic, they finally were going to taper. It was December. They started to taper, and then the market caved, and they caved with it. So I don't think there's anything he can do, but play the game out, so to speak. It's kind of like if you ever played sports years ago, you kind of know you lost the game, but you could walk off the field, but instead you say, listen, let's just play it out. And you do, and then they ring the bell, and you go to the locker room and you try to get home as fast as you can. I think personally that, I wouldn't even be surprised that he wouldn't be against him not being nominated again, because, you don't want to be the guy there when it all falls out. And, we have such social and political and economic troubles ahead in the U.S. here. And the Fed really is partly guilty of it, because they kind of took over being responsible for the fiscal matters here in the U.S. as well. We haven't had, by the way, it's not just Bernanke or Trump. We haven't, I'm sorry, Biden and Trump. We haven't had good fiscal policy in the U.S. for a few dozen years. And that's another issue for another day. But although all those things have made the Federal Reserve, in a sense, with the Wizard of Oz, behind the scenes trying to control everything. And when those screen doors open and they realize that he's not wearing any clothes, that's going to be the ball game.
So there's no appetite. It's not like there's a Paul Volcker style character that is willing to accept some pain for the greater good. Effectively, the Fed have sold out to the powers that be, will kowtow to the stock market. each time?
David, our political parties here are so at each other that I don't think there's ever been more of a split in the U.S. other than possibly during our Civil War. I don't think the parties, given what happened in 2008, they managed to go in a room. They didn't do the best of deals, but they were able to right the ship in a sense, preventing the financial crisis from getting worse, and then created, quantitative easing, which that's where it was born out of. But I don't think those same parties today, if suddenly they woke up to a crisis like that, could go in now and do anything similar. There's such hatred. We have no middle ground. Not only have we lost the middle class in America, we have no middle ground politically. We're either way left or we're kind of hard right. And so I just think we're set for, and I think our adversaries, if you want to call them, or our competition, whichever way you want to look at a place like China, recognizes this. And now, because of what's happened from our so-called military strength, which always was the carrot we would always hang out. I just don't think they have any more fear now, and whatever plans are probably being expedited, in my view, as we speak.
So you're saying there's a greater divide now, obviously, between the left and the right than there has ever been before, and that middle ground is even an opportunity for conversation in the middle ground has gone. What's the root cause of that? Do you believe? Over the last couple of years, is it political ideology, or is it a widening of the wealth gap?
Both of those must also include spiritual. I mean, like it or not, this country was once quite dependent on what we call Judeo-Christian values. It was implemented in every facet of our life, and in the last few decades, it's basically been removed. So when you take that, when you take this tremendous wealth, you brought up another great point. Since this pandemic started, somewhere between 1 to 10%, maybe it's 12%, people did really, really well. And most of those people had some sort of foot in the financial markets. The rest of America fought to hold on, or has slipped, or has fallen. And that's why the far left, the AOCs, and these type of people, which are really talking socialism and communism. I mean, that's what it's really about. That's why they have people's ears, because a lot of people have not done well. In fact, they've gone backwards. And so that sounds nice, when it says, look, that other guy is your fault. And because of that, and, they ran on it and they've been successful. But unfortunately, I don't think this ends peacefully. That's the real issue that I have here. I think, as we see already in other parts of the world, people are standing up against government, and I think we're going to see that here in the coming months. And that's why I said the stock market, the bonds, even the Bitcoiners of the world, they're priced for perfection. They're going to need perfection to continue doing what they're doing. I've seen in history, perfection always gets interrupted, and this time it's not different. And there we have gold. I'm not a gold bug. I mean, there's been times I've been completely out of it, and all. It's not something I've talked about for 40 years, so forth. But if there's ever been something that's unloved, underowned, and underwanted at a time when it makes more sense based on a couple of thousand years of history, that's where gold is right now. And that's why I say, even if you pick it as the lesser of two evils, I think it's a much safer place to park capital than stocks and bonds and cryptocurrencies right now.
That seems like a fantastic spot to leave this. Peter Grandich, thank you very much for joining us on GoldCore TV today.
It was my pleasure.
Thanks for watching. If you enjoyed this video, you might also enjoy these interviews that I've done with some other industry experts. And remember, if you want to see more interviews with industry experts and thought leaders in financial markets, subscribe to GoldCore TV and hit the notification bell now. And if you want to learn more about how to buy, sell, or store physical gold and silver, log on to goldcore.com, your precious metals experts.